Welcome after the closing bell, 11/16/2011. These are various different types of bear market ETFs. And we are going to, once again, we have all of these on our website. We cover these, and we're going to be looking at how that bear is making a bottom in the market and how that bull has made a top reversal in the key indexes. That's all of these indexes right here. Down 190, down 41, 46. S&P has had a reversal because it's below the 1250 handle. And the S&P 100, it too had a distribution, and Spain is in play. Now, we've had the big rallies, and we're going to go through some of these charts that people need to know about as far as bears. Here we go. We just wanted to touch base with a couple of the bears and how the bears had put in their bottoms here and how the indexes have ran their October rally from October 4th to the current reversal highs. But here, this was the high up here at 80.79. Just call it $80, okay? Now, we have come all the way down in this financial bear at the bottoms, and you can see here that we put in the bottom and we're consolidating the bear across the bottom here in these financials. It's very important to understand that these leveraged ETFs trade a certain kind of way. And yes, they got deeply oversold here, and there's a lot of problems going around the world, and when the markets rallied, they took it all the way down from here, MMTs. Look at the lows back here in October when we were at the high at $80 and we had that big rally off the bottom, just right along with the S&P and all the indexes went shooting up. What a great place to have been doing what? Getting net short on this bear ETF. You can short them down and make money. And now we put in a bottom here. And not only that, we made a 52-week low. And it's nothing to turn your back on, because that 52-week low in the calendar low is in here. And I can tell you here and now, MMT, that on this particular one, that this one is holding that support level. Not only that, it's consolidating here on a daily level where it gapped, it pulls back, it holds it. And if we break above it, there's going to be some upward resistance. But a lot of things around the world aren't going well, and this is at the all-time lows. This is the time to be getting involved in the bear financials when you're down here at the low. You have very little risk. Let us not forget that on 10-4, right here, 10-4, that's when we rallied in the indexes. We went straight down here to wholesale. FAZ. Bear is setting up a base. There are key areas where it will test on the upside, and we have MMTs involved in this trade. That's why we're updating the status on the FAZ. Nice movement. It's building a base. Once that baby breaks out, you can see where the calendar year low was right here. Right here. On 10-4. 81.20. And we're buying down in here. And financials are in bad shape. Maybe the U.S. banks aren't quite as bad yet, but it doesn't matter. Worldwide they are. And it isn't that great of a picture in the U.S. either. Banks aren't terribly bad like they were in 08, but there's always a trade. That's the update on the financials. You're building a daily base up here, and then the breakouts follow.